When you think about world economies and you think about financial systems, they're not on solid footing. There's a lot of uncertainty there. And there's a lot of questions on whether the people that are in charge have the capacity and the ability to manage something that complex. I think smart money understands that and has moved more smartly towards gold.
Sean Boyd, it's a pleasure to welcome you back to the Gold Telegraph Show. Today, gold is sending a signal. Critical minerals are becoming strategic assets, and trust in the financial system is being tested. And with your long-standing view on gold, including your $5,000 price call, becoming increasingly relevant, it's a perfect time to continue the conversation. Thanks for joining me, Sean.
Yeah, great to be here, Alex.
All right. Well, gold has always been more than a commodity. At critical moments in history, it becomes a signal, not of speculation, but of structural change. Today, gold isn't just rising, it's breaking out across currencies all over the world. Sean, with gold breaking out in a way we haven't seen in decades, from your vantage point, what fundamental shift do you think the market is finally pricing in?
Well, I think what we've seen is it's demand coming from multiple sources and serious sources, and we've always had this challenge in the mining industry of growing supply. It still remains a tough industry. So we're at this point where the industry has been chugging along. If you look at some of the major deposits that are producing the most gold on an annual basis, those deposits have been around for decades. So there's not a lot of new deposits coming on stream. So supply is doing what it's doing. It's not able to react even to these higher price levels. But I think on the demand side, I think that's been the game changer. And I think we see it consistently in the price action. And I remember sort of back before 2020 when we were sort of trading in that $1,600 to $1,800 range. Gold would get weak and it sort of tend to move to the lower end of that range. And there was always price support. There was always some serious buying there. And we're seeing it now, but at much higher levels. We're seeing a bit of weakness over the last little while, and then we've seen gold rebound. And I think that's a testament to its resiliency. And that's because there's multiple sources of demand that are waiting for entry points to buy it and hold it. For most of my career, it was always more of a trading instrument. Now it's a must-have investment vehicle that is attracting interest from around the world.
One, and like you said, Sean, like the resiliency in gold right now is incredible. And one of the things that I've noticed that makes this cycle, for me, it looks a bit different than just about the price. It's the participation. And with central banks accumulating gold at record levels, particularly in the East, while Western markets still tend to view gold primarily through the financial lens, do you think the physical gold market is beginning to exert more influence over the price than just the paper market? And what signals do you watch to understand that balance?
Yeah, I think it's the story about the move in gold from $1,000 to where we are now, and that would have started around 2010, was the desire to own more physical and have that physical essentially at your feet, closer to home. And we're seeing that sort of magnified now as we move forward with more central bank involvement, more interest coming out of the East. The paper market's there. It's more of a trading market. But the investment market and those that are looking for, to preserve their wealth and to maintain a store of value want the physical. And I think we saw that going back in 2010, roughly, when China said, no, we're going to open up our market. We're going to allow the importation of gold because we want physical gold. We can see it with the expansion of the Shanghai Gold Exchange and physical warehouses. People want physical. We can see it now in the tokenization. We can see coming out of things like Tether, weekly physical demand for the bullion. So I think it's the physical demand, which is actually the strongest demand, because it's not the trading demand, it's the investment demand that will mean that this price level has support and can go a lot higher as we see more physical demand coming in.
With the divergence between East and West feeling increasingly consequential, not just for gold, but for the future architecture of settlement and trust, is the East and West split in gold accumulation creating a new global monetary dynamic? And how durable do you believe that shift is?
I think it's a competition around supremacy of currency. And I think we're seeing major shifts here. And I think that's been driving certainly the Chinese interest in owning more gold and owning physical gold to support their currency. And I think we see that from other central banks where we're seeing buying out of places like Poland and Turkey, and now we're seeing Brazil buying gold. So it's really across the board. You can look at it as an east-west split, but east-west split, you can't sort of slice it that finely anymore. I think it's just across the board. It's almost every man for himself now, and governments are looking for ways to bolster their currencies, bolster their economies, strengthen their central bank reserves, and gold's playing an increasingly important role because of the distrust of paper. So it's interesting. So, being around for 40 years, seeing, we used to watch the screen as the CFO here, and gold would move $2 in a day. And it was kind of boring. And but here we are, we're in really exciting times where, gold's really coming into its own. It's always been there, but people are realizing the attributes that make gold a must own.
Well, it's incredible, Sean, like you just alluded to, like in terms of gold being a true sovereign asset, neutral reserve currency for countries to really hold on to just preserve their sovereignty. It's incredible to watch it on full display. And for a senior producer like Agnico Eagles, cycles obviously matter, but structure matters more. How does Agnico plan around the possibility that this isn't a short-term rally, but a multi-year structural bull market in gold?
Yeah, it's hard to, those questions come up in our strategy sessions. It's hard to sort of change and alter strategy significantly based on a gold call. It's hard to do that. And we tended to not do that over the years. And in fact, we were the only company of any significance or size that never ever sold an ounce gold forward. Never. And so our job was to find it as cheaply as we could find it, produce it as cheaply as we could, and take advantage of that margin. So I think where we are now as an industry is that there aren't a lot of big new deposits. There's some interesting discoveries. I think exploration is starting to bear fruit. There's some interesting stories. But the capex to build these things has gone way up. So it would be interesting to look at it from what's the new floor, because costs continue to go up. And so we actually need these higher gold prices as we think about opportunities to invest capital. But fortunately for us, we made some important decisions early on, and we put some assets and deposits in place that we haven't moved forward that aggressively in a lower gold price environment, but they're there now to be put into our pipeline. So we're actually well positioned to take advantage where we could see 30% to 40% growth in production from the existing pipeline. We still have work to do. These things aren't easy to do, but we have those. They're in good parts of the world. They're essentially in the backyard where we currently operate. So no shift in strategy, but I think if you're an up and coming company, now's the time to get the drills turning. You need to know now what you own, and you need to understand how you can get these things built. And that's the real power of this gold investment case, more than the bullion. It's in the high quality stories that give you that leverage to gold. And I think you're going to see more of that, and you're going to see it play out in quarterly earnings as they come up, because I'm not sure the exact numbers, but just looking at the rough numbers on where gold is now, we could see a $600 to $700 increase in the realized gold price for these gold producers. the numbers were outstanding in the last quarter. The numbers are going to be pretty spectacular, I'd say, industry wide. And that's the power of being in the business now, having made important investments in the past. So you're bringing this production on.
It's very interesting, Sean, with like you said, with where this price is, and it's going to allow more companies to really drill and test what they own. And shifting gears a little bit, Sean, gold, may be the anchor of the global monetary system, but it's not the only metal reshaping the global order. Copper, nickel, silver, and rare earths are no longer just industrial inputs. They're strategic assets, in some cases, instruments of leverage. Which critical minerals do you believe Canada is best positioned to lead the world over the next decade?
Yeah, I think it's hard to identify a specific metal. A lot of this will ultimately be determined by the quality of the deposits, because I think that goes for any sort of resource business. Is what is the quality of your underlying geology and your underlying deposit, its location, its grade, and that's what's going to dictate what we produce and how we produce it and when we produce it. We know we have the geology, but we know that that geology means we have to drill more, and we have to understand as a country what we own. I think that what we found over the last year or so as we've engaged governments is how strategic the disadvantage that the West finds themselves in relative China is sort of resonating with governments. We knew it was important. We didn't realize it was that important and that critical. And so there's a lot of ground to catch up in a short period of time. So it's time to move. And I think Canada's in a unique position, but Canada has to be somewhat careful. We can't just go out and sort of promise that we're the answer to make up that shortfall, because we still haven't found the major deposits that are likely there. We still have to do that work. And it's a tricky landscape. And what it actually means is the governments and Western governments are actually in the resource development business. They're in the critical metals business, and they're going to have to fund certain projects, whether it's loans, whether it's offtake agreements, whether it's price support agreements. Those are the mechanisms that are going to be required to help create an investment climate to bring capital in. It's there, and we're fortunate in Canada. We have geology, we have the history of the industry and how it's built a great company, which brings with it the skills. So we know how to do that. We just have to line the projects up. So it's hard to identify which ones, but I think continued exploration across the country and major geological belts will provide those answers based on the quality of the deposits that are found and then ultimately built.
We keep hearing from the mainstream about the growing concern about supply constraints, particularly in copper, which is a metal essential to electrification, defense, and infrastructure. From your vantage point, how real is this upcoming supply deficit narrative for copper?
Yeah, it's significant, and so a lot of that comes from sort of underinvestment in the space, and underinvestment in exploration, and so there's a bit of catch up, and we've seen sort of the mainstay anchor deposits. They're winding down in a way, and so we saw that a bit in the gold space around Nevada and deposits in South America, and then a new generation come along. So we're looking for that next generation. And it's really going to take leadership of industry. Industry, essentially, even though we need government involvement, industry has to push and lead, and government has to move in alongside them to help create that investment climate. So copper is an important metal. We have a good opportunity in Canada to find more copper deposits. The key to all of this, though, unlocking it, will be the processing capacity. I think China got way out in front because they were comfortable building processing facilities. Western countries have to get comfortable again building processing facilities. If you think about Canadian mining, Horn smelter, the Kidd Creek smelter, the zinc refineries, the aluminum, we have to get back to that. And we can do them cleaner. We can do them more energy efficient, in a more energy efficient way. So we have to get back to understanding you need all of the components to really build the industry. And you may get some pushback on that, but ultimately, having that sort of complete industry from exploration, discovery, to mine building to processing creates tremendous value, and that's what countries like Canada need right now.
And Sean, as supply tightens, governments are clearly responding through stockpiling certain critical minerals, export controls, and more assertive resource policies. What does resource nationalism mean in practical terms for Canadian companies operating globally?
Yeah, it's something you got to be mindful of, but I think Canadian companies should follow geology.
Yeah.
Follow the best geology, find the best geology. Not all companies are set up to be successful in some difficult political climates, but some are, and Canada is at the forefront in a number of these initiatives and a number of these exploration initiatives. So you have to be mindful of political risk when you're going to invest major capital, but you can't be afraid to follow geology and work in partnership with local partners to advance those initiatives. But again, Canada's in a great position to lead here, not only lead in the development of a broader and more expansive resource industry in this country, but also lead in other countries where we're helping those countries, where we're bringing skills and we're bringing capital to develop those resources for the benefit of those countries, but to the benefit of the shareholders of the Canadian-based companies. So it's a great time to be in Canadian mining. As I said in Ottawa a couple of weeks ago, it's nice to be back. We were sort of in the wilderness as a mining industry for a long time. It's nice to be wanted, but I think it's really important that Canadian mining companies run by Canadians with Canadian sensibilities are the perfect, driver and are in the best position to lead this industry to create more value in the country.
No, it's very exciting, Sean. Of course, I'm a very proud Canadian, and resources and especially Agnico Eagle being the largest mining company, or one of the leaders of the country. It showed the amount of wealth that it can create, and the amount of jobs, and how it helps the country on a GDP basis. But with Canada being so resource rich, policy, permitting, and infrastructure will definitely determine whether geology actually translates into supply. Is Canada doing enough today to support domestic critical mineral development? And if not, what's missing?
Yeah, there's a few things there. I think you talked to Alex about the policy and regulatory side, and certainly the quicker you can get these deposits from discovery into production, the better off and the better the wealth creation will be, and the more wealth you can create. We need to eliminate uncertainty. And so governments can do more. They can eliminate overlap, certainly, in the approval process. And this current government is working towards that. So that's number one. I think number two, it's important to think about the resource business as being a true partnership, because industry can only do so much. An industry has to work side by side with communities, with indigenous groups, with various levels of government to create solid value, and that value comes not just from the bottom line, but extends into the community. So that's what sort of we're focused on, and the governments need to focus on, is establishing that investment climate where we can create these partnerships to move these things forward. But nothing comes without exploration. And I think there's more that can be done to encourage exploration, but also take it one step further and to encourage that step from exploration, understanding the resource, and deciding, should we invest in infrastructure? Should we actually go ahead and build that mine? And one of the things that we were able to take advantage of back in the 80s, and it was more definitional. I don't think they really had to change the rules, but it was how they applied the rules. As I can recall, when we were building infrastructure at Demogamy Mines, which was LaRonde, and we were putting in essentially a shaft which we were using for exploration, we were allowed to deduct that in an accelerated way and flow it through to investors. So I think that flow through mechanism used properly, can not only fund more exploration, which we're going to need to find the critical metal deposits we need, but also to help improve the economics of actually investing in the infrastructure. And maybe that infrastructure is production design, but initially used for exploration, so you can open up deposits. But there's ways that we can do this and be more creative. And I would say that we know this current government is reaching out to industry and doing it broadly and listening and gathering ideas. And it'll be interesting to see how those discussions unfold into meaningful changes in policy.
Well, with Sean, it's amazing. I remember in the summertime, I know a lot of my readers, and I was very fortunate with mining.com publishing my article on LaRonde in the early days of that build, and it was a true story of when I was writing it. It really showed the resiliency of yourself and your entire team of building that asset, which is just an incredible mine today. And shifting gears a little bit, diving into Agnico Eagle, Agnico has always stood apart, not because it avoided growth, but because it was disciplined about where and how it grew. Jurisdiction wasn't a limitation, it was a strategy. And Agnico has always been jurisdiction first. Why has that philosophy worked so well while others chased high risk regions?
Yeah, it's mining, as we always say, it's a tough business. And so when you're layering on, different risks and increasing the level of risk, it just makes it all that more difficult. And so we were always focused on, we kind of knew what we were good at, and we were trying to find opportunities where we were well matched, that were well matched with our skill set. And I think we never really paid much attention to, we understood and knew what the competition was doing, but we were never distracted by that. And we were never sort of focused on, oh, we need to build an empire. We were just trying to create a good business that happened to mine for gold. That's really the way we looked at it. And we did that without a hedge book. So whatever the spot price of gold was, we were getting, which again forces some discipline on you. We were fortunate because we had an easy to understand story that we were able to deliver on, where we kept the risk levels manageable and understandable and low, that the markets tended to pay us a premium multiple for the business we had. And that sort of, not that we needed to be reminded that we had to be disciplined, but that also forced us to be disciplined, knowing that if we made a major mistake or increased the perceived risk level, then that multiple would suffer. And we had a multiple, and other companies would say to us, boy, we wish we had that multiple. And I would always say, well, you wouldn't have it long because I know you would abuse it. And we were fortunate that we knew that the worst thing we could do is abuse it, because your investors give you the multiple and they can quickly take it away when they're not comfortable. And so that's what we've tried to do. And we've been doing it for almost 7 decades. And it's really on the back of, 18,000 current employees and the thousands and thousands of employees that worked hard and made a contribution every day before them, that put us in this strong position, not only in the mining space, but just in corporate Canada. And we will add, because you made reference to the contribution that mining can make. We've made a rough calculation, based on the current spot price of gold, that we will be in the top 5 taxpayers in the country next year.
Wow.
So that's good value creation with benefits going back to the country. And from an Indigenous impact perspective, we're the largest payer of benefits under Indigenous impact benefit agreements in the country, with over 20 agreements. So mining can really make a difference. We need more high quality mines in this country. And with the right policy and the right leadership, we're going to get there.
Yeah, and with that, Sean, obviously Canada's mining landscape is constantly evolving, consolidation, and as you mentioned earlier in the conversation, capital intensity and scale are becoming unavoidable realities. How does Agnico think about the next decade of consolidation in Canada, and is consolidation necessary to remain globally competitive?
Yeah, scale's more important now than it would have been in the past, because the CapEx numbers to build these things are big. The projects sort of in the pipeline are big, but that doesn't mean that growth for growth's sake is the way to go. That's always a bad idea. And just because scale is important, just to say you're bigger because you're bigger doesn't mean you're better. And I think companies still need to be focused on, yeah, it's nice to be bigger, but make sure as you get bigger, you're getting better and you're becoming higher quality. Because what the country needs is going to need some capital. It's going to need skills. It's going to need capital, and that comes from really good opportunities and solid, sound businesses that are sustainable. So just mashing some things together won't work. Investors won't invest in that. They're only going to invest in those companies that put forward smart ideas to get better. And I think that will drive more consolidation and smart consolidation. We always said back in 2018, 2019, when we saw some mergers that consolidation was important, and it will be successful over time if the right assets end up in the right hands. And I think that's still the case. And that's also, I would say, the right assets would not just include producing mines, but the right development projects. And I think what the future holds is probably more partnerships between companies, and to look at these large capex projects and share the risk. And I would say from an Agnico perspective, now, given the size of our business, given the financial capacity of the business, given the broad range of skills and experience we have, we're in a position to be an important partner to others as they think about Canada and coming into Canada to do more. We would love to do business with those companies.
You said something so interesting, Sean, and it's, in terms of not focusing and chasing the empire building, but focusing on the quality, the geology, and the rest. And that's obviously why Agnico today is one of the most respected mining companies in the world. And with that, in a supply constrained world, optionality becomes strategic. What role does long term optionality play in your strategy today?
It's critical because those ounces you can tie up now. You may not see a short-term or medium-term pathway to get them into the production profile, but they're important because our founder Paul Penna said, "Look, you know what? The gold, it just sits there. It doesn't rot. It doesn't eat. It just waits for the conditions to make them economic." And that's still truly the case. So I think a big part of smart sort of successful long-term businesses in the gold space, they tie up things early, and they work them. And they work them to de-risk them, but they also work them to understand them. And it's really important to understand what you own. We used to be criticized. The team at LaRonde would be criticized because people would say, "I don't understand, the strategy. Why are you drilling? Why are you putting holes down at 7,500 feet? You're never going to be able to get that." And then we would drill to 8,000. Then we would drill to 9,000. And I think we're down to almost 3.5 kilometers. And the simple answer we had was, we need to know what we own. Doesn't mean we're going to get there tomorrow or next week, but we need to know what we own. And I think that's the case, is that these things are depleting assets. So you need to have a pipeline. You need to understand what that pipeline can do to the value creation. But you also have to combine that with looking at other assets that are out there that you may want to strategically insert into your business. I think it's the combination of that which requires discipline. But this is really about optionality. It's about tying up as much high quality gold resource as you can, and over time converting that into reserve, and then ultimately getting it into your production profile.
And with that, Sean, few regions reflect Agnico's long-term approach more clearly than Nunavut, a jurisdiction that demands patience, discipline, and commitment measured in decades. Nunavut is a globally significant frontier. What's Agnico's long-term vision there?
Yeah, it's a special place. It's an important part of Canada, but it's a really important part of Canada's future because of its potential, and its potential of the people and the communities, but its potential to responsibly develop resources, not only to the benefit of the communities and the people of the North, but also to Canada as a whole. So it's an interesting sort of point in time, because in a way we've been forced to sort of look a little bit inward, look at our own opportunity set as a country, and try to figure out what we're good at, and then what we can do to set our own path and create our own sort of value. And mining is an important piece of that, as is the North. And the North has so many implications, not just for creating value, but also for sovereignty. And we see our adversaries are still around. You talk to senior members of our military, and they're still around. And not only are they around, they're still in the communities, and they're still making a case for investment in the North. So Canada has to take the lead, has to work closely with our partners in the North, and have to be serious about making not just the physical infrastructures like port and roads, but also the community infrastructures, as we say all the time, and the social infrastructure, so we strengthen those communities. That creates the sovereignty that we need in the North. That allows us to live up to our responsibilities in North America to protect that northern flank, but it also creates stronger communities that can help with the resource development. So we're really well positioned there. As you know, we're a significant component of the economy, but there's a lot more work to do. And I would sort of add that the Hope Bay project, which is coming, we've spent a lot of money since we took that over exploring. We proved our theory that it was bigger. It will be a bigger production base. First half of next year, we'll announce a restart. But it's more than just announcing a restart. It's the historical significance of that project, its location, the fact that one of our adversaries, let's say, almost owned it, that it's now owned by a Canadian company with the skill sets to make it happen, and around that, building in the community issues. So initiatives. So when you think about it, the current government has, a project pipeline or critical projects group and all that. Hope Bay's not on it. Doesn't need to be on it because we don't need anything. We can certainly manage that. But it's a project that's coming out of the gate way quicker and way sooner than a lot of those things in the special projects group. And I think we should pay attention to that. And I think the government's starting to pay attention to that because it's an important moment to send messages to Canadians that mining can make a major contribution, and to do it in a way which demonstrates support for the communities there. So that's coming. So we're excited about being able to do that. And then, as an industry and as a country, how do we build other opportunities around that?
Yeah, no, well, it's extremely exciting, Sean, about Hope Bay and the developments happening there. And shifting to our next theme, I know we both love, and we both love macroeconomics, and so we'll dive into the world of macro. And mining doesn't exist in isolation. It sits downstream from a lot of macro forces: debt, inflation, capital flows, geopolitics. Nowhere is clearer than in the Arctic. Nunavut sits on the front line of Arctic sovereignty as Russia and China expand their presence in the polar region. How does Agnico view its role in strengthening Canada's strategic footprint through long-term operations?
Yeah, well, we have a business to run, and we can choose to be anywhere we want to be as we think about, managing our shareholders' money and building that business. But we've made our choices, and our choice is largely to be in Canada. We have important businesses in Nunavut and in Finland, in Mexico and Australia, but the core of our business is still Canada. And it's funny how we've built a top 10 market cap company, public company in Canada, largely focused on mining in Canada. So we've chosen to be there, and we've chosen to go to the north, which is not an easy place to do business given the lack of infrastructure and just the harshness of the climate. So that's the choice we've made. And we're going to invest more, and we're going to build out Hope Bay, and Hope Bay is in an important geographical location. But as part of that process, we've reached out to the Canadian military, and we've talked about how can we assist them. We have a business to run, but we're in the neighborhood of where they may be or may choose to be, and we have some better capacity than they have. We have better logistical support capacity. than they have. And so I think we've been encouraged because we tried a few years back to get some discussions going and really reaching out to the military saying, look, you need to know where the best rocks are in the far north. Because ultimately, if you have a choice of where your installations could be or should be, you should choose to put them closer to where the best rocks are because that's likely where industry is going to be. So we started that dialogue at the senior level with our company and the military on, look, how can we cooperate? How can we cooperate in emergency response, in emergency preparedness, in logistics? What are you building? Where are you building it? You know, we're pretty good at planning barge seasons. What are the learnings there? We move massive quantities of diesel, way more than you can imagine, and we can help you. So that's what a good Canadian company should do. Understand the moment, and the moment is now for Canada to move sort of more quickly on its own path and less reliant on the South. And a lot of that will happen in the North. And so we're reaching out to other major pools of capital like the military that'll invest there, the governments that are also going to be investing there, and the communities that have social infrastructure needs. And we need to have those discussions to understand where we can be helpful. And that'll just make us that sovereignty stronger because we'll have stronger communities up there and we'll be coordinating. We'll be getting a lot of things done quicker, get them done more efficiently. And if we can help in that, then, you know, that's a responsibility that, and that's a job that we should be doing.
Yeah, no, and Sean, something you said to me in the first conversation that I thought was so powerful and so true is that mining is 24/7 and it doesn't stop, and it's around the clock. So the information, the intel, the logistics, all that, it really it serves as such an important tool for any government to really absorb. And you know, globally, sovereign debt continues to rise, and fiscal pressure is becoming structural rather than temporary. How do elevated sovereign debt levels influence long-term mining decisions, and also just the price of gold in general with all this debt out there today?
Yeah. Yeah, you know, you look at it and there's no solution to rein that debt in, and investors know that, and that's why gold's benefiting. And so there's no easy way out. You know, your governments aren't going to drastically cut their budgets. They're going to, the easy route is to inflate. And that's likely the way this will unfold. And again, I think smart money understands that and has moved more smartly towards gold. And the big central banks that are effectively controlling the printing presses are buying gold. So you sort of go, okay, wait a minute, what's happening here? So gold's clearly benefited from that. You look at the U.S., it'll get to 40 trillion. You know, at some point that becomes unmanageable. You don't want to think about what could happen, but you want to protect yourself and get your insurance while you can get it. And I think that's the role gold's playing. In the bigger picture, how does it affect mining? I think, you know, the mining industry does its best work when it's focused on geology and potential. And it understands external factors, but it focuses on what it's good at doing, and doesn't get distracted and get involved in things it should not be doing. And this is not a criticism when I started Agnico, but in 1985, Agnico had investments in men's clothing, in Turks and Caicos real estate development, and a bunch of stuff. That's not what it should have been in. And so that was those days. There was a lot more color in those days, and so companies, really mining companies, just got to focus on what they do well. That'll benefit their owners, that'll benefit their employees, that'll benefit their communities and their countries. And I think that's what you're going to see. There's a lot of excitement out there on the exploration front. You talk to a lot of people that have really good drill programs going. They're excited about the upside. The key will be in just getting back to one of the points on the government side. We're going to need skilled workers. And so the government has to really communicate to Canadians as they talk about their value creating strategy. How is that going to be supported by the availability and the quality of the skilled workforce? Like, how many are we going to train? How many are we going to bring in from outside in an immigration strategy? So that'll be the key for a lot of this value creation.
Yeah, no, and Sean, we'll dive into shortly how we can attract and why it's so important to really continue to grab more attention and have a bigger workforce and more younger people gravitating towards mining. But it's funny. I remember back even 5-6 years ago, to your point about central banks printing money and buying so much gold. I remember when gold was kind of sideways and they were buying record amounts of gold and they were doing quantitative easing. And even today, the Fed recently announced they're buying short term duration treasury bonds again. And the central banks around the world are continuing to buy just an unbelievable amounts of gold. And even in some capacity, there's a lot of speculation out there. Even the Financial Times put something out that China's not even declaring how much gold they're buying right now. But with that, as trust in financial systems erode, capital often gravitates towards what can't be printed. And do you see capital increasingly flowing toward real assets as confidence in paper just declines?
Well, I think you see that the good example of that is the stable coin. And
Yeah.
so you're looking for backing, you're looking for stability. Where do they turn? They turn to gold. You look at Bitcoin, it's a coin, it's a gold coin. So, their marketing was this, they're smart marketers because they're connecting it to an asset that people understand that for thousands of years it's been that store of value and that preserver of wealth. So here we are. And so the reality, though, is that there's not a lot of it around, and there's not an ability for the industry to quickly ramp it up to adjust to this price level. So there will be no shortage of demand. When you think about world economies and you think about financial systems, they're not on solid footing. There's a lot of uncertainty there. And there's a lot of questions on whether the people that are in charge have the capacity and the ability to manage something that complex. So when you're in that type of situation, people revert to what they know, what they can trust, what they can count on when they need it. And here we are with gold. And so, and just getting back to, China not really disclosing what they've been up to in terms of buying. Well, that kind of makes sense. Why tip your hand?
Yeah.
And so they've been doing that for a while now, and you may be surprised at some point that they have, a massive amount that they've been buying. But while they're buying, other countries are buying to catch up or to solidify their own financial system. So it's not just the buying; it's the fact that we've seen shifts over the last little while of, where is that physical? How close is it to me? If it's in another country across an ocean, maybe that's not good enough anymore. If there's a major crack in the system, maybe I need it home here. And so the fact that people are going to the trouble of moving it, so it's there, tells you a lot about how they value that insurance.
Yeah, no, well, it's amazing. It's funny. I know one of my friends who I've had on the show, Pierre Lassonde. He really believes the Shanghai Gold Exchange, and will eventually turn into, in his words, a casino type mentality, just with the strategy and gold being such a center point in terms of the strategy in China and just the allure with the citizens in China with gold. And at the same time, Sean, capital costs and financing conditions have become far less predictable, changing how projects are evaluated. Is the mining industry prepared for sustained interest rate volatility?
It's tough, and so when you look at where these projects, the new projects, are found, they're not in the traditional backyards for the most part, which means that they're going to be infrastructure challenged, more expensive to build. And we can just see the escalation over time. You used to be able to get a mine built for $250 million. Now it's 500 billion, 2 billion. Money has to come from somewhere, and people want returns. And so the question is that, I would, mine building is more than a science. It's an art in a way. And if we had stuck strictly to the science and said, no, I'm sorry, if it doesn't meet our 15% after tax rate of return, we're not building it. LaRonde wouldn't be built. I think it was 8%. But we said, okay, 8% is enough to get it going. But we have this idea based on sound evidence that this thing can continue to grow. And here we are now at 3.5 kilometers. It was the same thing when we got involved back in 2014 when we had an opportunity to work with Yamana to buy Osisko, so to get half of Canadian Malartic. If you actually ran the numbers at the time and used the spot price and used the reserves, it was a single-digit rate of return. And we got a lot of pushback. In one of the meetings, the fund manager said, what are you doing here? Like, wait a minute, like this book is misleading. I said, well, what do you mean? He says, it doesn't say low return on it. I said, that's based on the numbers that we currently know. But our experience in that region is that's the type of land package that we've had a demonstrated history of creating lots of value. And we actually think there's a really good potential that there's an underground component here. We haven't identified it, but this thing isn't cut off, and the old miners left, when gold price went down. So again, that's that optionality. And I'm not sure what the number is now, but when you combine reserve and resource, they say I'm not supposed to do that, but when you do it, it's high 20 million ounces now. Yeah. And so if we hadn't taken that opportunity because we wanted to test a geological theory, and our people have tended to be really good at that. In fact, Elaine Blackburn, was with us for years, is probably responsible for outlining 40 plus million ounces. When he would say, look, we think there's really good potential here, we'd go, even if it was a 6 to 7% return, because we had confidence in him. But we also had confidence in our technicals at team's ability to extract more value. So we'd always say, wow, they want another 200 million for that acquisition. And I would say, well, look, if we don't think our people are good enough to find another 200 million, then we don't have the right people. Of course they're going to find it. And so I think that's the way companies have to look at it. And shareholders have to be a bit patient here, because there's no barn burners, there's no slam dunks here. This is a tough business. But you have to go with people that have done it before, have the experience, know how to do it, have the right partnerships. And even if it looks like, oh my goodness, it's 10, 12, if the geological upside is there, then you go. And that's the way we built this business. We've always said to our team, who we trusted because of their track record, what do you think? We know it's this big. Is it this big? Yeah, it's that big. Or it's that big. Okay, let's go. What are we waiting for? So that's the art. So that has to happen. So shareholders have to be patient, particularly as we open up new areas in the north, because it's even a little bit more difficult to show those barn burner rates of return. But that's why when you say, okay, what is Canada going to deliver in critical metals? Well, depends on the quality of the deposit. That drives everything. And so we basically built a high quality business that happens to mine gold. One mine, LaRonde, because the team said, look, this is what it could be, so we're going to go for it. And in fact, that goes back to Paul Penna, when Noranda was looking to get out, and he said, look, I'll get you the money, I'll pay you back, we don't want you to go, it doesn't look good for us if you're leaving, but we'll take it because we think we can do it. And that's what happened. And around that, we stayed disciplined and added, assets that, were as good as that asset. So that's how you do it. But in order to be able to do it, you need to have patience. You need to have your owners being patient with you, because stuff happens. You're dealing with nature. But in order to get that sort of goodwill from your shareholders, you got to be open and transparent with them. Because if you're, trying to pull a fast one, they don't have to stick around, and they likely won't stick around. And that's why when I look over 40 years of being in this business, I've seen many companies come and go. And the companies that aren't here were the companies that took on too much risk. And largely it was financial risk. And some of those companies were companies where their shareholders just said, you know what, I'm out. I'm not even giving them time to fix this one because I've had too many problems and they haven't been transparent with us, so we're out. So the way to build these things is to create that goodwill when you make mistakes, and we've made a lot of mistakes, but we created a business and a relationship with our owners and our communities where we're allowed to dig ourselves out of the holes we created. And so that's the way you got to look at mine building. It's tough, not easy. It can be done, and that's why Canada is so well positioned to grow a bigger business here, because not only do we have the technical skills, but we have the experience and knowledge, and we're battle hardened as an industry because we've lived through the tough times, and now we see better opportunities given the gold price and the copper price, etc. And it's time to take advantage of that.
No, and Sean, that's such a brilliant lesson on the importance of taking calculated bets with a team of people that you truly trust, and stepping back from individual variables. Is there, I know how much you love macro. Is there a certain macro signal that you are watching, very closely right now?
We watch inflation because inflation in this particular business affects the revenue side because gold tends to do well, but also affects the cost side. And so what investors don't want is they don't want gold to go up and cost to track the rising gold price. That happened, 15 years ago or so, and it didn't go well. And so we're always focused on inflation from the perspective of what are we seeing on the ground? Like, what are we seeing on input prices? What are we seeing in wage price pressure? But you're less concerned with wage price pressure if you're understanding the value you get back from the skill that's brought to the table. So it's not just what the number is, it's sort of what you're getting. And so that's the inflationary side of the cost. And we see some inflation, but we don't see severe price pressure, which I think is a good thing. Now, what's going to happen down the road? We're not sure. But I think we're in a position now where, given the size of the debt levels, inflation from a debt perspective is likely not a bad thing. And so we're likely going to see some. So that's what we're kind of watching because that impacts both our revenue and our costs. The rest of it, it's hard to predict. It's so volatile. We don't control the gold price. We can only control our costs and what we do and how we invest capital. At the end of the day, we're capital allocators, not just money, but people. And so that's what we really focus on. Where can we get the best bang for our buck and make the business better?
Turning to Canada, Canada, as you've mentioned, has absolutely extraordinary geology, and with that, as we have talked about a bit in this conversation so far, geology alone, doesn't always win the race. Like, framework, speed, and coordination really matters. If Canada could fix only one thing to accelerate mining development, what do you think it would be?
Yeah, I think it's just to improve the certainty around project development. I think that's key, but I think more than that, I think that will happen, and I think there's a lot more work that can be done there. But I think what the political leadership can do is help to change the mindset, and to become a country that says, like, we can do this. Like, we know there are risks and challenges, but we can actually do this, and create that mindset that we kind of know we've been woken up, which we kind of know now it's our moment if we want it to be our moment. Like, we have everything that you actually could ask for as a country. Our debt's not wildly out of control. It's high, but it's manageable. We can still have a budget that invests as long as we invest that properly. We have skills. We have resources. So let's get to work. And I think that's something that we're seeing some of that from this government. I think it's still early. We do know because we've engaged the government because they have an interest in mining and mining opportunities. But it's like night and day from the previous government to this government in terms of the outreach, the terms of the quality of the questions, the interest level around the discussion. Can you provide us with some advice on this, or what should we do for this, or how should we look at this? We haven't had that before in a long, long time. So I think we're on the right path. There's a lot of work to do, but really, when we look around, we should feel really fortunate and blessed as a country. It's not perfect, but no country's perfect. But if we sort of get the formula right, um, and we listen to 90% of the people and not the 5% on each end, and keep driving and work hard and stay focused and disciplined, we'll attract the capital, we'll attract the skills. People will want to be here, not just to come here to build a life, but also to invest capital here, which is what we're going to need. So we have to create those underlying conditions. So we're in a good position to do it.
Yeah, no, and with that, Sean, permitting has become one of the most critical bottlenecks around the world. How do we build a permitting system that protects communities while still enabling world class projects to be built?
Yeah, I think it's you got to create a system where you have dialogue early on, and build those partnerships early on. Speed's important because time is money. Certainty is important because capital can move. Capital doesn't have to come here; it has other options. So we got to create a comfort level around the permitting, around the coordination, the dialogue, and we have to listen. And so I believe we have a pretty good formula. And that formula was based on the principle when we went up to Nunavut for the first time. We reminded ourselves, remember, we're visitors. We're going into a new area. It's an area we don't really know. We know it's a part of our country, but it's got a history and it's got traditions and it's got people that have lived there and survived and thrived in some of the harshest environments, and we're coming to their land. And so that was the basis for everything that we've built since then. And so there is some distrust, but I think dialogue goes a long way. And I think the other thing that's really important is to, and we said this earlier in the conversation about mining companies needing to understand what they own in terms of the deposit. What's the potential? What could it be? What do we need to do? I think communities need to understand what they own by having companies building businesses there, by companies building deposits that the communities have or the associations have royalties on. Like, what is it you actually own? You should quantify that in a way if you can, particularly around the royalties. And we find that we have a ways to go when we look at a deposit in the north that has a royalty attached to it. Well, that royalty, I think, is important, and maybe the holder of that royalty understands, because we know, being in the business, that that royalty could be monetized. And if that royalty could be monetized, not all of it, but partially monetized, there can be significant capital coming now and upfront, and they don't have to wait until the mine is sort of built out. And I think we have to do a little bit more work in saying, here's what you in fact own as part of this development. Here's how important it is. Here's how financial people view this in the royalty space. Here's how these royalties are valued. And the fact that this royalty is on this quality deposit run by this quality company, it's worth a lot more. So you should have those discussions, and then you should determine how you can put that money to work in your community. So we need to get there as well, because I think that will demonstrate to the communities that the benefit isn't sort of down the road. The benefit can be now, and it can be present. It can impact the young people that are going through the system and the school system now. So, and I think that's happening now, and it's about dialogue and constructive dialogue. But everybody's got to be brought along in that process, and And again, there's no one blanket policy for this. You can have a view or a vision. We just get back to the deposit. Like, what is it? Where is it? Who's it around? Who does it impact? And you work that, and you work it properly. You work it the right way. And if you're collectively doing that around the country, then the end result, when you add it all up, is going to be massive. And that's the way we've got to look at that, because they're all different.
No, it's brilliantly said, Sean. And one of the things I'm really noticing right now is, the United States, China, and Australia are moving very aggressively to secure critical mineral supply. And I know you said it to me in our first conversation, and it's so true. Like, this is Canada's moment. What must Canada do to immediately what must the country do to avoid being left behind in this global competition for critical minerals?
Well, I think we have to be prepared to create the entire industry, including processing. And that's tough. That's a tough conversation, because it's, where are those going to be, and what is the impact of those going to be on communities? But it's not going to be enough for us to just, put a bunch of drills out in the field and maybe identify some interesting deposits. We have to we have to build those deposits here. We have to process those deposits here. We have to control the output and manage the output, because that's what our adversaries are doing. And they're doing it in a way which is making it difficult for us to compete in certain metals, because when they see a development come along, they'll put price pressure on the metal, and it hurts the economics. And so that's why we also said earlier, governments have to provide the offtake, the price support, maybe some loans. You look at an investment we have in the U.S., Perpetua. So it's gold, antimony, clearly of interest to the U.S. government. We have a small investment along with J.P. Morgan, their new fund, invested together to help move that project forward. But involved in that is the U.S. government putting up a sizable loan. I think it's in the neighborhood of $2 billion over an extended period of time at attractive interest rates with an offtake agreement. I'm not sure if they quite got to the price support, but so that's what's needed to actually move things forward quicker. But we have to be careful, because we don't have, as a country, 10 high quality critical metal deposits lined up ready to go. We haven't done the exploration. We know we have the rocks. So we have to get exploration going, identify these things, but we have to be open, and we have to know that there are pluses and minuses here. We have to be prepared to build processing facilities here. Now, that has an environmental impact, but we can do them a lot better than they were being built 30, 40, 50 years ago. We can do them a lot more cleaner, and we can do them with cleaner energy. So we look forward and we say, okay, small modular reactors, likely, maybe it's 10 years out, that's going to be a boon to the resource development business, because we can't put these deposits where we want them to be. They're going to be wherever they are. And then we're going to have to come there. And we're going to have to bring power there. We're going to have to bring a processing facility which needs power. Or maybe it's a satellite deposit that gets shipped. So it's there's a lot to do here, but we got to get started on identifying where they are, go into the regions, help with flow through, get drills going, work with communities, understand the benefits if it's done properly, when it's done properly, but be prepared as a country that we need to provide it from front to back, and we have to be prepared to build it all out.
Yeah, no, and with that, Sean, it raises a broader question: does Canada need a national mining strategy, and what should that include?
Yes, and that's a tough one. And because it involves, and it's not just a national mining strategy, but it's a national building strategy, I think,
Yeah.
because it involves the building of military installations. It involves the building of critical infrastructure to open up parts of our country. It involves investment in social infrastructure to strengthen communities that have issues. Then it involves investment in resource development. So this has to be coordinated. And if you look at the vastness of this country, just on its own, that should have some coordination. So my question is that I know this current government understands the need for coordination and its critical projects office, et cetera. And I know the Privy Council's office is more engaged in this than they would have been in the past in understanding where the levers are and trying to provide some coordination. The question you asked, the question that we were asking, is that enough? Do we need one quarterback that actually has visibility on where everybody is focusing and what they're planning to do? And that goes back to the basics of us saying to the military, you should kind of know where the best rocks are. And it goes back to those basics. And so somebody needs to be, or we offered up to say, look, maybe you should get, 6 seasoned sort of former executives in the resource space and to be an advisory group to maybe help with that. But I think that would be helpful, but that's not the full answer. The answer is that you need someone to quarterback that. I don't know who that is, but they have made some good moves. They're trying to fix procurement. They brought a very smart banker in, well-known banker that we would know from our interactions in mining. Smart guy. When I heard that name, boy, they mean business. The fact that the guy took the job, the fact that they asked him to take the job means they got to fix procurement. They realize they need to fix it. So they're doing stuff. But that question on coordination, I think we don't have the answer, the clear answer. And that's why we say, look, just level with Canadians. Tell us what the strategy is and layer in the components. Tell us why the immigration strategy is the most effective plan, because it's going to bring in the skills that we need to do what we need to do. Like, connect all those dots for us. You can do that. You can tell us where that's going to get us as a country. You can tell us why that's what we need to do and how we need to do it. People will buy into that. But if you piecemeal it and all Canadians see is a bunch of moving parts and we're not sure how they're all connected, then we're going to tune out in a hurry. And basically, you're asking Canadians to write a big check for a bunch of stuff because we're running massive deficits. So I think, it's helpful to basically say, look, here is the plan. And I don't think we've ever heard that ever.
Yeah, no, and with that, Sean, and before we jump into our last theme, to end this on a lighter note, I'd love for you to touch on one of the initiatives that my friends over at the Northern Miner with the hunt, the treasure hunt across Canada that Agnico's supporting. Maybe for my Canadian readers and viewers, maybe to elaborate on that initiative and why that's so exciting across the country.
Yeah, so there's $1 million worth of gold hidden out there in Canada. And there's clues being, put out, and someone will ultimately piece it together. Maybe they're making it too hard. I don't know that anybody's close because I don't know where it is, and not many people know where it is. But there are regional prizes or regional $25,000 quantities of gold that I think 2 have been found so far. The first one, I think, was in the Yukon, and it was a young family that found it. So we just thought we would have some fun given the current environment to try to shine, through that initiative. We're telling the backstory of mining in Canada and why it has been such a major contributor to the success of the country. So there is an objective behind all of this to get that mining story out. And so the big prize is still there. It's still there to be found. We know it's winter. We know it's cold. We know people, want to stay in some warmth. But it'll be found. It'll be exciting because someone it'll make their day and maybe make more than their day when they find it. And we'll all be hopefully there to celebrate with them. But it's also this idea about communications to the country is important. So we've got another campaign coming in 2026 around building off of the We Make Mining Work campaign we started, which was more of a social media campaign I think back in 2018 or 19. So we're expanding it, and we're expanding it because Agnico's tended to, just go about our business, kind of keep our head down, but it's a story that people should know a little bit more about, from the perspective of the benefits that it's brought, to the wider benefits that it's brought. And we'll tell it, partly through the impact we have on the North. So all of these things are positive because they send a positive message about what sound investment can mean in an industry that's had a history of adding a lot of value, and there's more to come. And part of it is to let Canadians know that we're good at mining, and mining is going to add more value to the country. And the government should play a role in creating the investment climate to get more capital here to do that. Because the other thing that people should know is the average mining wage is double the average industrial wage in the country. So these are high paying, high quality jobs that have a lot of spin-off benefits to the communities where these operations are located. Not to mention, again, the taxes that get paid to the government now in this environment.
No, those two very impactful and important campaigns. It's funny, Sean. I'll never forget on the treasure hunt. I'll never forget first time I ever held a kilo gold bar. I'll never forget that moment with how heavy it is and just how I don't think people understand the allure of gold until you're holding that type of size in your hand. I'll never forget that. I think I was like 13 or 14 years old. I was blown away. I think that's what made me a gold bug. So it's, shifting
Probably.
gears. Yeah, yeah, definitely. Well, it's funny, shifting to our last theme today, and really appreciate your time, Sean. And this has been an amazing conversation, on the future of mining leadership. Mining has always been about people, engineers, geologists, operators, and leaders. But the next generation faces a very different world. What does the next generation of mining leaders need to understand that previous generations just didn't?
I think with this generation, there's a tendency to be a little bit too fine in the analysis, and that can create some indecision. And so, as we look at leaders, the question that we normally get, well, can that person say no? And that's not the right question. The right question is, can that person deal with imperfect information and incomplete analysis, but still have the ability to see the opportunity and then go? And so that's hard to teach. And so we talk about that a lot here. Like, how do we identify it? And if it's not naturally there, how can we potentially teach it? And this is what we've been talking about the country. And it's not just this industry, it's multiple industries. We need leadership that is comfortable taking risk. And that's how this country is going to maximize its potential. And it's not just the mining industry. So I think that takes exposure, more experience, failure. People make mistakes, and being in a situation where it's okay to make mistakes. You get things wrong. We've made a lot of mistakes. But that's absolutely, it's funny you end on that. That is actually going to determine how successful this country is in its entirety as it embarks on this next phase of sort of economic development, kind of on its own, less reliant on the South. It's going to be the leaders. It's going to be the young leaders that aren't afraid to make those decisions and aren't afraid to deal in sort of in the midst of uncertainty, to actually see through all that and not get sidetracked.
With that, Sean, I really appreciate your time today, and I wish you a Merry Christmas alongside the entire Gold Telegraph community, and I really hope we can have our third conversation in next year. It's always lots of fun.
Yep. I look forward to that, Alex, and Merry Christmas to you and your family, and to all your listeners.